At the World Economic Forum in January, the discussion on the road to COP30, the 30th United Nations Climate Change Conference to be held in Brazil in November, showed a journey fraught with the usual bumps. President Ramaphosa reminded us at the G20 meeting of ministers at Cape Town this week, calling for a just transition and need for the financial and technology transfer support required to make the clean energy transition less of a burden to lower income countries. All this in the same week when oil giant BP says it has abandoned a radical attempt to reinvent itself as a green energy company. But the term just can be less compelling, especially if one has benefited from status quo order for decades. Perhaps Cyril Ramaphosa should be using another phrase increasingly favored by analysts who are now calling for a pragmatic transition, a transition that factors the need to navigate the complexities that have made the journey to save our planet much less straightforward, but still one we cannot abandon. Hello, welcome to Global Business Insights, where we look deeper at the main business stories. Today in this episode, we look at a rising call for a more pragmatic transition to cleaner fuels. But first, some of the main stories. Yesterday, major US indexes were mostly flat ahead of today's personal consumption expenditures price index data release. Economists expect the measure of price changes for consumers to rise 0.3% from December for an annualized gain of 2.5%. Core PCE also expected to increase by 0.3% month on month and 2.6% year over year. As traders digested Nvidia results, despite a strong beat, evident pressure on margins may have led to more caution as the stock closed down 8.5% after seesawing in early trading yesterday. It seems focus was on the outlook for first quarter gross margin, which came in lower than Wall Street expected. It could also be the sour mood driven by uncertainties around trade tariffs, dragging down benchmark indices and behind the sell-off, despite corporate releases that were mostly healthy. In Europe, a change in the German political landscape could be supportive of market sentiment, especially if a government can be formed quickly. The US Bureau of Economic Analysis, BEA, said the United States gross domestic product expanded at an annual rate of 2.3% in the fourth quarter, matching the initial estimate, and came in line with the market expectation. The US Census Bureau reported also that durable goods orders in the US rose by 3.1% or $8.7 billion in January. This was after a 2.2% decrease reported in December, and better than the market expectation for an increase of 2%. Still in the US, the Department of Labor reported that citizens filing new applications for unemployment insurance increased to 242,000 for the week ending February 22nd. This print missed initial estimates, also was higher than the previous week's revised tally of 220,000. Moreover, continuing jobless claims went down by 5,000 to reach 1.862 million for the week ending February 15. In Nigeria, the latest money and credit statistics report by the central bank reported that net domestic credit declined to 99.41 trillion naira in January 2025, reflecting a significant contraction from 115.58 trillion recorded in November. That was last year. The data also underscored the fluctuations in domestic lending. But looking at the reasons, firstly, average lending rate from 26.62% in December 2023 to 30.28% in December 2024 is a significant jump, which is a disincentive to borrowing. Secondly, Treasury bills rate rose, and being risk-free, much funds that could have gone to lending was diverted there. The high inflation also reduces the demand for consumer goods, which also reflects in demand for credit. Also, a lot of domestic borrowing by the Nigerian government is crowding out credits urgently needed to boost, especially the manufacturing and other credit sensitive sectors. Now, to some good news for Germany that just came in this morning. January retail sales rebounded 0.2% month on month after the 1.6% decrease recorded in December, and better than expected. The path to cleaner energy has suddenly become more complicated, to put it lightly. But the planet is too important to just simply abandon what many now call an unstoppable transition, admittedly with still many unaddressed issues. Damilola Ogunbiyi is CEO and Special Representative of the United Nations Secretary General for Sustainable Energy for All and co-chair of UN Energy. She speaks to some of the issues at the World Economic Forum in January at Davos.
Damilola Ogunbiyi. She is Special Representative of the United Nations Secretary General, Chief Executive Officer of United Nations Sustainable Energy for All. So you have a big title and a big job. Tell us, if the U.S. is pulling back in the green energy transition, but corporates are still moving forward, how does that, in your view, change the global green energy transition?
Okay, like everyone here, thank you for having me. I think I'll buttress what Simon is saying. This is actually an unstoppable movement now. Economically, this is what makes sense. You know, I work in the other half of the world that's sometimes less sexy and not mentioned enough, which is the global south, especially on the African continent. When I go and meet government, I don't come in with a climate agenda. I come in that this is how you can end energy poverty, and this is how you can end poverty for many people. And the answer to many of that is renewables. Unfortunately, we still live in a world where 600 million people have no access to electricity at all, and 2.3 billion have no access to clean cooking. To put that into any matrix, you know, and if you don't care about anything else, clean cooking is the 5th largest cause of death of an African woman today. So you can't say that you shouldn't swap out to these better technologies. It's the difference between life and death for a lot of people. Other thing that gives me so much hope is just on this stage alone, between the COP presidency and Simon in terms of carbon markets and the great work IKEA Foundation is doing, leading the charge on ending energy poverty, we're already collaborating at a scale where no one can stop. Not one country, not one leader making a decision, because it's just the right thing to do globally. The other reason why I want to focus on the global south is that we cannot live in a world where we can have people in energy poverty and think that we can hit our climate agreement. We don't live in a world where half of the world can do something and the other half of the world cannot. And what we're seeing is quite scary. We're seeing that there's a lot of localized pollution. You have like a continent like Africa plagued with 23 to 25 million small petrol gensets. These aren't big coal plants that you can just shut down at once or those type of plants. These are things that you can't regulate. You don't know where they are, and you can't tell people that they can't have energy. So that's where we're really focusing on. And with that and clean cooking, you cannot get it done at scale without the carbon markets.
There has been progress in that we now have global production of wind and solar energy growing from almost 0 to 15% of today's energy generation. But the part played by hydrocarbons have not been significantly dented too, as the total energy needs of the world has been expanding at a very fast pace, with the energy-intensive artificial intelligence, digital-driven revolution in the north and the south's faster economic growth and bridging of massive infrastructure and energy deficiencies, leading to demand for energy that can only be shooting up much faster than before. Today, achieving net zero emissions, a balance in which any residual emissions are offset by removals of emissions from the atmosphere, remains in a too far distant future and is so easily overshadowed by more immediate and pressing priorities and challenges. The call for justice and urgency is therefore complicated by other hot buttons like rising poverty, rising geopolitical trade tensions, energy insecurity, reducing today's pollution, ballooning debt, sticky inflation, reviving economic growth, and a simmering east-west and north-south rivalry. The way forward can be anything but the linear path many had charted for the clean energy transition. Let's consider some of the issues. The main one is the cost of the transition and who should be paying for it. This alone is enough to scuttle any progress. The rich economies agree they have benefited more from the dirty energy and should pay more to clean up the climate mess, which could cost about $7 trillion a year. Some analysts have said the US would have to cough up at least 10% of their GDP, a staggering figure that factors in the green premium. That's a situation where low carbon technologies come with a more expensive bill. Then the economic shifts implicit in the energy transition are also significant. Today, the International Energy Agency forecasts that global demand for minerals needed for clean energy technologies will quadruple by 2040. These are minerals such as lithium, cobalt, copper, nickel, and graphite, which are already seeing a spike in demand. China already has a well-defended dominant position in the processing of most of these minerals into metals essential for renewable energy infrastructure. China also accounts for over 60% of the world's rare earth mining production compared to 9% for the United States. A cleaner value chain is almost synonymous with China domination involving production and even potential dumping of batteries, solar panels, and electric vehicles components, supported by the massive state subsidies and deployment of massive amounts of capital towards energy infrastructure in the developing world. In short, the energy transition plays strongly to the advantage of Beijing in the China-US rivalry for geoeconomic influence, and should it surprise us that a large part of US opinion are not sold on it. There are other issues. Another main one, for example, is the widening north-south divide. Less than 50% of low-income economies, especially in Africa, have access to steady electricity, most still using wood and cutting down trees for fuel. Energy security, energy affordability, and sustainability all imply different things in different countries. The result is an obvious clash of priorities and an ocean of distrust. The obvious and difficult truth is that any path to clean energy must pass the sniff test of the nose of the less developed South, because that is where a lot of growth of energy demand will come from. My short summary is that the present challenges, including the US pivot towards fossil fuels, which should not be surprising, and Africa's call for just transition should be an opportunity for reimagination and a new compass and new maps to navigate more sustainably the journey to protect the planet. Asia-Pacific markets were lower after US President Donald Trump confirmed that tariffs on imports from Mexico and Canada will be going ahead and taking effect next week, and announced plans to hit China with a new 10% tariff. But on the other hand, and helping market sentiment, we have lower oil prices and possible resolution of war in Ukraine. Trump also said he's working on a trade deal with the UK, hinting that Britain could escape tariffs. US Treasury Secretary Scott Bessent said late yesterday that he opened to the idea that other countries' tariffs could come down or go away, adding that the Ukraine minerals deal is done and will be signed later today. Well, that's it on this episode of Global Business Insights. Enjoy your weekend and thanks for watching. This is Bode Oshosami. Bye-bye.